Good morning, good afternoon, good evening, whenever you are watching this week's video, y'all. So your girl started recording a video, and what did she do? She was on mute. She was about 5 minutes into the video, her being me, she being me, her being Patrice L. Berry, EA, aka the tax cop, up here just the chitting and the chatting, and ain't nothing being recorded, except for all the mannerisms and things. So we gonna take two, and we gonna break down things for this week. Y'all let me know if you feeling the late 1990s, early 2000s hairstyle. I'm just missing the earring, the big earring, the big gold hoop. I feel like, you know what I'm saying, and some waves. Just doing this real quick so that I can record this video for you all. I wanted to break down stuff, and we're going to talk about stuff a little bit different. I told you we were going to keep talking about the one big beautiful bill, and we will. But this week, we're not going to be talking about them charitable contributions or gambling losses and winnings. We're going to hit them next week. This week, we're going to be talking about a program that I talked about before. The first-time penalty abatement, aka the IRS's automatic exemption process. The reason why is because we are going into the heat of extension season. Like, we in it. We 30 days out for the S corporations and partnership returns being filed. And then we are 60 days out for individual filing for extension season, right? So we're in it. And I noticed that certain times of the year, we'll get an uptick of notices. As we're coming out of the busy season, there'll be an uptick of notices. And in the last couple of weeks, I'm starting to see notices flow through. Now, for my clients, I'm not sure if any of you have gotten a notice yet saying that, hey, this applied and any penalties for failure to file, failure to pay at the IRS level did not go through because of this process right here. And we'll talk about why that is. I keep pointing at the other screen because I'm going to break it down for you all real quick, right? I just wanted to hit on this because of where we happen to be in the season and because I'm starting to see these notices come through. And I want us to pay attention to it. I do. I want us to pay attention to it because first-time penalty abatement really is going to eventually phase itself out. However, as an enrolled agent, I'm always in my analysis phase 1 of investigation, going to be looking for opportunities at where we can actually serve you in the best ability, right? Because a first-time penalty abatement, I've seen it sometimes where it's like, wait a minute, we got two. Which one do I want to go after? Because I always want to hit the bigger amount. Why? Because that's more beneficial for you. It is going to be more beneficial for you not to have come out your pocket more dollars than maybe a 30 or 40 or let me say $150 failure to pay penalty, if that happens to be the case, right? So we want to be able to have the biggest bang for your buck because that serves you way better than it serves the IRS, right? And so we're looking for those opportunities. For those that my tax clients that I do, not every client do I have a power of attorney on file. That's either a 2848 where I can actually speak on behalf, make some decisions, have those conversations, versus an 8821, which still gives me information purposes, where I can actually see what's going on, get copies of notices at the federal level. Some of these states, I be putting it down and they still don't be sending me the notice, so you got to share it with me. But for my clients that I do prepare returns for, we always mark down that they can come and ask questions. If anybody needs to ask questions to the preparer, that box is checked. Why? Because we ain't got nothing to hide. We got work papers built into the returns. We got notes in our software. We got notes in the portal that if correspondence comes and I'm starting to get those correspondence, that we can help you draft that correspondence and put that packet together for a return that we prepared. Why? That's part of your audit protection plan, right? That really is what you're paying for. If correspondence comes 2, 3, 4, 5 years down the road for a return that we prepared and you have your audit protection plan built in, we take care of the correspondence because a lot of times you may not understand all the nuances and the notes and a decision we made to take a deduction this way versus this way. And we do. We have it documented. And so that's why that's built in to cover that correspondence. Anything other than that, if it gets a little bit more aggressive, right? If it gets a little bit more into it, then what will happen is that will then kick you over to a resolution situation. And resolution is handled a little bit differently. The price points are higher because it takes a lot longer. We get into it a little bit more nitty gritty, and it can elevate quickly, especially if we talking to revenue officers, etc. So just to kind of give you that background. But one of the biggest and early wins, you've probably heard me talk about it in the past, is to get a penalty abatement. And there are two different types of penalty abatements that exist. That first time one, and one where we give reasonable cause and give a justification as to why, based off of the rules and regulations, why you qualify, and that we would like the IRS to consider removing the associated penalties and interest if applicable. But today we're going to talk about this thing that's live and in charge. Why? Because a lot of these instructions and guidelines are coming out this month. So let's look at it. The IRS introduces the new automatic penalty relief process. This is the same thing as first-time penalty abatement. They launched this new automatic exemption process that provides penalty relief to eligible taxpayers automatically. But understand, there's rules to everything. This was announced August 10th, 2026, and applies to tax years 2025, 26, and future tax periods. This is why in investigation period, I'm going to be looking bad. And you like, wait a minute, it's automatic. And they could, look, baby, I don't know how, they say they starting looking at 2025. Does that mean it's going back to look at a previous year to give you the abatement that you are entitled to? Baby, I don't know what they're doing. If you've gotten a letter and a notice and I don't have power of attorney from you and you fell into this category, I would love to see what this notice looks like because I haven't seen any yet, right? Not that I don't have clients that apply. I just haven't seen a notice where this automatic exemption process has taken place. All right, let's go to the next slide. All right, so now we want to know how it works. Always want to know how it works because there's rules to everything and you got to be able to fit into the rules in order for it to work in your favor. You got to file and pay on time for the past 3 years. Or if we're doing quarterly, like for our quarterly filers, then you got to have 12 consecutive quarters. That still equals your 3 years. But they're looking at the stuff on a quarterly basis. Okay? So for my self-employed people, for my payroll peoples, hey, when we file them quarterly tax payments and stuff, that's what they're talking about. Auto apply. The IRS automatically applies this exemption to eligible returns. No action is required on our parts. Now, how do we know if we apply? If it happened to us, you're going to receive a confirmation notice from the IRS once the relief has been applied. Now, I'm gonna get in your face now, cause why? Cause y'all about to get mad at me. We gonna stay here and then we gonna come back. Why? Because y'all gonna be like, Patrice, this is the first time I paid late, and this, that, and the other. It said when they process it. Not when Patrice processes it, not when we think it should be processed. I don't know how many days they do it from the time we submit, they process it and be like, oh, like it may be a whole different department that does it. But if you qualify for it, they're supposed to notify you. Now, does that mean they're going to notify you automatically in your IRS account? Baby, I don't know. This new. This just started this season, right? This guidance, this documentation just came out last week. I don't know. But I want you to be on the lookout because if this applies to you and you know you qualify for a situation like that, we need to be on the lookout for it. Especially if you're a client of mine and y'all know that the auto protection plan is included in your priorities. We need to be on the lookout for it. Okay? That's what I'm saying. Let's hold these people accountable. Penalties that are covered. Now, there's only a couple penalties that are covered. The failure to file penalty. So, relief from penalties for returns not submitted by the deadline. That deadline was that April 15th deadline where we were supposed to file an extension. Or as we come into the extension season, if you do not file by the extension deadline, September 15th for my S corporations and my partnerships, and October 15th for my individuals and C corporations, September 30th for my estates and trusts, boom. And then for my 990s, Miranda gonna correct me down the road. I think it's November is when theirs is like November 15th or something like that. Correct? Y'all, I don't do the nonprofits. But they can still have them failure to file penalties too. We need to get that joint straight. Failure to pay, relief from penalties for taxes not paid on time. Meaning we filed an extension. We do the return during the extension season. I count extension season anything after the deadline, the busy season deadline. We do them. And then what happens? You have a balance due that you were not hoping to pay. Right? You thought you paid enough. And now you got a penalty. Boom. That's a failure to pay penalty. Which one I tell you I hate the most? The failure to file penalty is higher. That thing annoy me. Failure to deposit. Relief from penalties for missed payroll or other required tax deposits. Hey, for those people not filing them quarterly taxes, we do have penalties at the federal and state level, but right now we're just talking federal. All right. If you do not qualify for this, what other thing do you qualify for? Reasonable cause. Now, why do I say that? Because this sure enough sound like the first time penalty abatement. That's exactly what the rules are for the first time penalty abatement. And if you don't qualify for that, then you got to do reasonable cause. And you got to make sure you have a reasonable cause justification and fit into the categories. And it's determined by case basis. Ain't nothing on reasonable cause. Like, it don't work like the first time penalty abatement. Just at all. It's not going to work like this at all. You got to justify. You got to prove your case. You got to prove your case. All right. If you don't meet the AEP requirements, you may still request penalty relief based on reasonable cause. The IRS evaluates these requests on a case-by-case basis. On a who basis, case by case, who make the decision? The IRS. Who don't make the decision? The tax cop. She don't make the decision. She help you put the thing together, but I can't guarantee nothing from nobody because I work for Total Tax Experience, not the IRS. All right? Keep that in mind, please. How to request it? You're going to visit the IRS website and review the penalty relief for reasonable cause. I believe we talked about this in another video. I'll make sure we have a link available for you to refer back to or check it out on our YouTube website for where that video is sitting. All right? You got to do it by the way the people say, not by what I say. What's your takeaways? You need to be filing on time. Period, point blank. We cannot be standing out in the waters for forever. And then we upset because either we missed a refund because of that 3-year requirement or we didn't file on time and therefore we could have got some of this stuff reduced and we don't have the ability to get it reduced any longer. 3 years or 12 consecutive quarters. It has to be an on-time filing and payment. I'm going to say it for the people in the back. I don't think this applies to you. This is not judging. But for the person behind you. Look behind you. The person, that person. Tell them, tap them on the shoulder. Hey, she talking to you. She not talking to me. Boo, I'm not talking to you. I'm talking to that person right there behind you. And so that person needs to know you got to file on time, meaning even with the extension, and you got to have paid. And that payment on time really is that April 15th deadline. That March 15th deadline. All right? I'm just saying. That one for you. Her. Him. Back there. That's who it's for. All right? No action is needed on your part. Starting in 2025. With the 2025 return. No action is needed. The IRS applies this automatically and sends a confirmation notice. How they going to send that notice? I don't know. Maybe it's going to come in the mail. How long it's going to take before you get the notice? I don't know. I know it ain't going to be the very next day after we file that tax return. I don't know. But if you get one, I want to see it. I would love to see it. Reasonable cause is a fallback option. Meaning, if you don't qualify for this, you can still look for relief elsewhere. Now, this is the IRS. The I, the R, and the S, they are federal. At the state level, ain't no such thing in most cases, in most states, for an automatic anything. In most cases, ain't even a first-time penalty abatement. It depends as to what each tax and revenue office says. The closest one I think that's similar to this is California. Now, California do some things, but everybody else, I'm telling you, you're going to reasonable cause it. And your reasonable cause got to be justified. And I don't even know if they be reading the reasonable causes. Why? Because I have fought with some states and the District of Columbia, and we have had some great justification. And then people was like, and so you can stroke us the check. Now, one of the things that I have noticed, that you should pay what you owe, that penalty and whatever, and then go fight. I know y'all like, what? The IRS, you can do a little bit different. Hey, before I pay this, I really want you to remove it, right? And then do the calculation and I pay you whatever the difference is. Them states, I told you, they like Rumpelstiltskin. Okay, the IRS is a gentleman. The states, not so much. They stalking you on Facebook and Instagram, and if you on Twitter, they stalking you there too. Twitter's not a thing. Y'all gonna kill me. X. That lets you know I don't be on there. Okay, I don't be on X because I'm still calling it Twitter. Anyhow, the tick to the top. They might find you over there as well. But I digress, and I'm being serious. The state's not so friendly. But the rule of thumb is go and pay them people their money, then put your case together and see from a reasonable cause if you can fight it. But if you just hold out and be like, I'm gonna fight them, I'm not gonna get the money, they're gonna just knock this off. I'm not gonna even stroke a check for them to take forever to get my money back, because they're gonna take forever to get your money back, and they're not gonna give you no interest for you to be taxed on it anyhow. I'm just gonna tell you, be mindful, be aware, make sure stuff is working in your favor, knock the payment out, then go fight them. And it's gonna have to be a reasonable cause with some justification. And your justification gonna have to be cross-referenced, T's crossed, I's dotted, supporting documentation to get you there. And I can tell you in a lot of cases, they be like, okay, thank you, still pay it. I'm telling you that. And I have had some where I've actually talked, and I'm thinking about the Virginia comptroller, where I've actually talked to them and they told me, yeah, you're not gonna get the money back. And we do everything they say, make all the payments, and because they've done some stuff and we've justified it, and we did, we built our case, next thing you know, my client gets a check. Now it takes some weeks, but then all of a sudden they get a check and there's no letter explaining why they got the check. And we go back and we were like, wait a minute, that's the exact penalties. And glad it got cleared up. I have seen it happen. I have seen it with my own eyes from Virginia happen. So I do know that paying it and then going to build your case at the state level, but asking for a first-time penalty abatement or anything automatic, baby, that's not going to happen at the state level. Let me know if this was insightful. Let me know if this was helpful. Let me know if this got you some insight as to another way to plan that strategy. Biggest takeaway, file on time. Pay what you believe you owe. Everything need to be paid by that extension deadline. If you don't pay and you have a balance due, you're going to have failure to pay penalty and associated interest. This works right here because now we got a first-time penalty abatement taking place and going to get rid of some stuff. But be mindful, you still may have to go another route to get this to happen if you qualify. Until next week, where we really will talk about charitable contributions, and we will talk the following week after that about gambling, losses, and winnings, and how it looks, and what the One Big Beautiful Bill changed. I'm going to holler at you. Have a great rest of your week. Peace, y'all.